Hey there YouTube, it's Jeff Perry with Must Be Nice Investments, and we're coming back today to finish up our series on single family financing. But before we start this video, please hit the subscribe button down there, guys. This is critical for a new channel like this. One, just to have the motivation to keep going, but two, obviously the ultimate goal is to get a little bit deeper base of subscribers. So if you would please, if you're liking the videos, hit like on the video, subscribe to the channel, and we'll get right into it. So today we're talking credit score. Your credit is a big deal. It is a super big deal when you want to be an investment or you want to invest in real estate. And typically the guidelines for real estate investing as far as it pertains to credit are going to be a little bit stricter than when you're dealing with, purchasing a primary residence or a residence that you plan on living in. So your credit score is not just about having a high enough credit score to get a mortgage. Your credit score is also going to impact the type of interest rates you're going to get. And a lot of times, these interest rates can either make or break the loan, or not the loan, but the cash flow on a property. So make the property either worth investing in or not worth investing in because, hey, you got a little bit higher interest rate, you're paying more monthly payments, it's less cash flow, and it's not hitting your goal or your targets. So let's talk about, first of all, the requirements and what is required really quickly. When you're financing 1 to 6 properties, you're gonna need a minimum of a 620 FICO score. Preferably, you're gonna have a 650 plus, and really, honestly, you really should be in the high 7s into the 800s on any of these, but a minimum is 620 is the minimum that they will take. Any mortgage lender across the U.S., 650 is what most of them are looking for. 7 to 10 properties, the minimum score that they'll take is a 720 FICO score with the preferred of 750. Again, most of these lenders would prefer you to be in the high 7s, if not in the 8s. That's going to give you the prime interest rates. That's going to save you the most money on interest, and that's going to make each one of the deals that you look at a better deal for you. And I think most of this is basic stuff. I mean, a low credit score is going to indicate to a lender that, hey, you're a little bit higher risk than someone who's got a higher credit score, because the higher credit score also has you have a better history of making payments on time, etc. You have a better history, or just a longer history in general, and you're going to represent less risk to that lender. In turn, they're going to allow you to have a little bit cheaper financing to that loan. So that's basically what most of them are looking at. This is not rocket science. The higher the credit score, the lower it's going to cost you to get loans. The lower it's going to cost you to live in almost every aspect of life. I get rental people all the time that are trying to secure a house, and they say, hey, is credit okay? What are the minimum credit requirements? And I get it a lot. There's a lot of people who have trash credit histories, and in some cases I get credit applications that I run, and it's like, man, we got a 350 credit, and it's like, wow, how does that even happen? I go and look at it, and they've only got literally a couple $100 that they're delinquent, and it's like, man, for a couple $100, you're costing yourself, when you go rent a house, at least $100 more a month. Could be more. That some landlords are going to charge you more because, hey, you're just a little bit more of a risk. But for a couple $100, you could have taken care of that credit history, avoided this altogether, where it's going to end up costing those guys or those tenants thousands of dollars over the life of their rent. Let's also look at another cost you're going to be getting as that is affected by your credit score. Could be when you go shop for insurance on your home. So not talking about PMI, I'm talking about homeowners insurance, or you're getting renter's insurance or something like that. They're going to look at your credit score to see, hey, what kind of person is this? Are they going to cost you more to insure, etc.? So it's also going to cost you there. And I think about 85% of insurance companies are going to pull some sort of credit report to understand, and this is going to be a soft pull, but they're going to understand what kind of person you are from that standpoint, because again, the risk profile for how you live your life, etc., whether or not the house is going to be taken care of, whether or not there's going to be accidents related to you, it all goes back to what kind of person you are. And one credit score is one of the ways that these larger institutions can make a judgment on you without having ever met you. So today we're not going to get into how do you make your credit score higher. That's a whole nother video in itself. It's probably a little bit longer than this video. Just know that protect your credit, pay your debts, go out of your way to make sure that you're paying on time on all your debts. If you don't have a credit, go get some credit out there and pay your debts on time, and just start as early as you can and make sure you keep that thing high. And as the years go on, as you pay down debts, etc., as you create a history with the lenders, with other creditors, your credit score will go up. So guys, I know short video today, not a lot to talk about. I'm going to hit you guys hopefully back tomorrow with another video. But please like and subscribe here. Keep me motivated. Keep this channel going. It's new. It's in its infancy. And you guys are everything to making this channel a success. So I appreciate you tuning in, and we'll see you next time.